the architecture of an empire. Honma's journey began in Sakata, a port town that served as the heartbeat of the rice trade. In the 1700s, rice wasn't just a commodity, it was the gold of Japan. Taxes were paid in rice, and samurai were paid in rice. When Honma took over his family's firm, he didn't just want to be a wealthy merchant, he wanted to be an architect of information. His communication network was a marvel of pre-industrial engineering. By placing men on rooftops and mountain peaks every 6 kilometers across the 600-kilometer stretch between Sakata and Osaka, he created a high-speed data relay. When a price moved in the capital, Honma knew it in minutes. While his competitors were waiting days for a messenger on horseback, Honma was already placing his trades. He understood the first rule of the modern age. Information is the only true currency. Decoding the emotional signature. However, Honma realized that speed meant nothing if you couldn't interpret the crowd's madness. He retreated for years to study the fountain of gold, eventually concluding that the market was driven by 2 primary emotions, the yang of optimism and the yin of despair. The candlestick was his breakthrough. It allowed him to see the battlefield of a single day. If the price opened low but closed high despite a massive dip in between, the wick told him that buyers had stepped in with force. He began to see recurring shapes, the doji representing a market in total indecision, or the marubozu representing a total takeover by one side. To Honma, these weren't just shapes, they were the footprints of the enemy. The Sakata 5, a masterclass in discipline. To formalize his strategy, he developed the Sakata 5 methods, Sakata Goho. These weren't just technical indicators, they were psychological tests. 1. Sanzan, 3 mountains. This pattern suggests a market has reached its limit. Just as a traveler cannot climb 3 mountains without resting, the price cannot attempt a peak 3 times without a major reversal. This is the ancestor of the head and shoulders pattern. 2. Sansen, 3 rivers. When the market hits a valley and bounces back 3 times, it forms a foundation of stone. Honma used this to identify when the yin, or selling pressure, was exhausted and the yang was ready to take over. 3. Sanku, 3 gaps. In his era, a gap in rice prices meant a sudden shock. Honma taught that after 3 consecutive gaps in one direction, the trend was overheated. He would famously sell into the 3rd gap while everyone else was buying in a frenzy. 4. Sonpo, 3 methods. This is perhaps his most important lesson, the method of rest. He believed that the most successful traders spend most of their time in the rest phase, waiting for the market to reveal its true hand. 5. Sanko, 3 soldiers. When 3 strong candles appear in a row, it signals a shift in the mood of the heavens. It represents a total change in sentiment where the momentum has become undeniable. The philosopher of the exchange. By the time Honma reached the end of his life, he had achieved a level of wealth and influence that surpassed even the most powerful daimyos, lords. Yet he remained a student of the human heart. He wrote that when all are bearish, there is cause for prices to rise. He was the original contrarian, buying when the streets of Osaka were filled with panic. His legacy is the realization that the chart is not a map of the economy, it is a map of the people. When you look at a red or green candle on your screen today, you aren't just looking at a price change. You are looking at the same flickering flame of human emotion that Munehisa Honma mastered 3 centuries ago. He proved that the person who masters themselves is the only one who can ever truly master the market.